As you guys can see earlier, what comes up to your mind when you first heard the word accounting?
Dealing with lots of money, collect and organize the data, and how much it costs to produce the chicken wrap.
You're right, but not enough. Accounting is beyond that.
So what is accounting?
Accounting is a system in which all the financial transactions are recorded in a proper and system way. Also, accounting is the process of recording financial transactions pertaining to a business, which includes summarizing, analyzing, and reporting these transactions to oversight agencies, regulators, and tax collection entities.
Let's discuss about what does accounting mean for you. I think accounting is something that we can get clear picture of our financial management. For example, we can record our income and expenses. Recording our income and expenses can allow us to create a budget on a weekly or monthly basis. This will allow us to evaluate if we are overspending and make changes to be smarter in our spending. Also, we can look for our future planning. This can be done by breaking down our own budget and figuring out how much money to save for our future use.
So, what is the next point? Let me bring you to the next point, which is, does accounting provide benefit to our daily life? The answer is absolutely yes, especially in business transaction. Whether you're a small or a big business owner or even a consumer, accounting helps track transactions, ensuring clarity and accountability in financial dealings. In which the first point is accurate financial records. It ensures all financial transactions, including sales, expenses, and investment, are accurately recorded and organized. This accuracy is essential for maintaining transparency and accountability in business dealing. The next point here is monitoring receivables. It allows business to keep a close eye on their receivables, which involves tracking outstanding payment, following up with customers who have not settled their bills. This proactive approach to managing receivables is essential for maintaining a healthy cash flow, which contributes to the financial stability and success of the business. And last but not least is the business planning. Accounting data is an essential tool for creating and adjusting business plans for growing a successful business. It provides a historical record of financial performance and serves as a basis for forecasting future revenues and expenses in order to grow the company.
And lastly, accounting provides benefit to our daily life in investment planning. Accounting skills can be applied to help make smart investment. For example, if you decide to invest your money in a company stock, knowing how to calculate profitability, liquidity, and debt ratio allow you to analyze a company's financial statement and make informed investment decisions.
Business entity concept. The transactions associated with business must be separately recorded from those of its owners or other businesses. Doing so requires the use of separate accounting records for the organization that completely exclude the assets and the liabilities of any other entity or the owners. Without this concept, the records of multiple entities would be intermingled, making it quite difficult to discern the financial or taxable result of a single business.
Owner's draw. For example, our team decided to sell chicken wrap and our leader decided to withdraw money for the business capital and other expenses. The transaction must be written as an owner's draw to signify the transaction is for personal use or for business use.
Not only that, we can apply some business entity concept in our everyday life for budgeting and separate bank accounts. For budgeting, treat your personal finance as a separate entity from your business or personal investment. Create a budget to track income and expenses just as a business would. Next, separate bank accounts. Maintain separate bank accounts for personal and business transactions to clearly distinguish between the two entities.
Okay, the next one is monetary unit concept.
The monetary unit principle states that business transactions should only be recorded if they can be expressed in terms of a currency. In other words, anything that is non-quantifiable should not be recorded in business financial accounts. We can express it in terms of currency. For example, when our business sells a chicken wrap to a customer, the transaction would be recorded as a revenue on the business financial statement in terms of ringgit Malaysia.